Welcome to the weekly swing low. It's August 16th, 2025. We're going to go through our normal tickers today. We'll start with ETH. We talked about this a couple of videos ago. This is definitely the trade. It's now woken up. When we talked about it last in more detail, we were just below 4,000 and we're pulling back here. So it's a great opportunity. We're looking at the ratio here. You can see this is the ratio of ETH to Bitcoin. And you can see on this monthly chart, we have this bottom here. That's your April 7th bottom where everything kind of had a synchronized bottom. And we'll talk about the broader markets, but everything kind of bottomed on that April 7th, including this ratio of Bitcoin, ETH to Bitcoin. That's important. We drew these little, these little candle potential. Like this is the V reversal that I would expect, right? We had this big undercut low. Look, or actually, I don't think we ended up undercutting, did we? Yeah, we didn't, right? We actually didn't even undercut this low here. We got really close. And so we're early in this new thing. The thing is, we're relatively late in the longer term cycle, and so we'll see. There's a lot of narrative behind ETH. On the weekly chart, you can see we have again that bottom. Well, actually, oh, interesting. This thing actually went on to make another lower low after that April 7th bottom, so that's important to note. But we are just breaking out of some consolidation on the weekly chart. Let's look at ETH itself. So ETH, as I said, is pulling back. If you think about the daily chart, we rallied for 52 days, right? So Wednesday was our top. That was day 52. We now have a swing high. Very simple, very specific, and it's your opportunity, friends. So below 4562, 4,562 and 87 cents. That's your swing high. You can see price tried to get back above that level, and then we got this big wick. That's important. And now we're consolidating below it. Said a different way, once price crosses back above that, right, like all you need to see is a candle like something like this, and we're in business. Now, be careful. We're going to have lots of fakes below, above and below that line, I imagine. And so you don't need to chase anything. Let it come to you. But this is your opportunity after this big rally, right? We had this little pause here that resumed. We're having a little pause here again. So this looks like we started a daily cycle decline, and you have your very clear level, your very clear daily swing low level. And if you zoom down to the 4-hour chart, you can see the way these cycles have been playing out. You can see them, right? Like this is your clear low, right? Like that's an obvious low on the 4-hour chart. And so you can see this looks like that's one cycle there, and then you have this other one, right? And this is where it can be a little subjective. That say that swing low, right? Because you have multiple swing lows from which to choose essentially, and then you go from here to like let's say here, something like that. And this precise cycle counts are irrelevant. It's more of looking at the chart and seeing the pattern, right? Like oh, that's clearly an important swing low, right? Like look at that, right? So that's about 60 days. And then from here to say here, right? Something like that. I think that's your low. So that's a shorter one at 50. And so we could just be in the middle of, right, like bar number 30 or something after a low here. Now, it's also very possible that that's just consolidation and this was your top. And so we're going to get our low somewhere here. That would be a relatively long one. The point here is that you're going to be able to catch this on a lower time frame. This is your 4-hour chart. You can see we're kind of bear flagging here. So your line in the sand has been drawn very clear, right? This thing needs to stay above 43.68, and we need to break above. We need to stay above that. And to really be in business, we've got to break above here, right? Like call it 44.78. And then again, we have that swing high level, right? So this would be your first sign, right? Like you need a candle to break through here, and then maybe you get some follow through on that candle. You get something like this. Big picture, this thing is probably heading to something like 10,000. And so you catch it around here, that could be a double up. I am using ETH U, which is a leveraged play, so a 2x. So you can see that one made a swing high, very clear as day. So for ETH, that swing high is below 176, and we're down here at 157. Wow. So, I mean, that would actually be quite, what is that? That's already a 12% rally just to get back to that swing low. This thing moves fast, obviously, because that's just a 6% move in ETH for this thing to get up 12%. So that's how I'm playing that. And looking at the big picture, looking at this monthly chart, look at that beautiful swing low. Again, this is off the April. And price, keep in mind, price really hasn't done anything at all. Like, this is like a gigantic consolidation box that we're still inside for all intents and purposes. Look at this move, right? That's what we want to see, some price discovery. And I suspect that is exactly what we're going to see, right? We're gonna eventually see something like that. Like, you have to kind of visualize this. I think it's helpful to, and it doesn't mean we're making predictions. We're saying this is what's going to happen, but you have to kind of visualize a scenario that you can kind of see unfolding, and then you watch for signs that that is the scenario that's unfolding. That's the way I kind of think about it, right? Like, it's like something like this, right? I mean, I realize we're getting a little crazy. Look at that, right? Like, imagine a scenario like that where this thing pops up to like 9,000, over like overshoots to like 15, and then we get a violent pullback, and then it shoots back up. I mean, that would be kind of crazy, but this is the kind of thing you want to prepare yourself for. Obviously, using clear stops, as we talked about the 4-hour chart. There's a very clear level, and that level corresponds to the level on this daily. So right now, it's all about being patient and waiting for that move. Bitcoin, at the same time, is doing the same thing more or less. It's just not as strong, and so Bitcoin actually printed a bearish outside daily candle. That's important. So the range of that candle gave us a new all-time high. So the high of 124,533, and the low is 117,208. So we've got to get back above that level 117,208. It's very simple. On the daily, have to reclaim that, and then we're back in business. On the weekly, and I didn't mention this for ETH, but it's the same count. We are on week 18, which is the same count for the broader markets. Again, everything kind of bottomed around that April 7th. Everything had this cascade waterfall down, and so everything just kind of recovered all together. So that's Bitcoin. So Bitcoin really needs to stay above that. Really call it 117 even, right? Like below this low, you kind of, if you're already in. That said, if you missed some of this rally, this is going to there's going to be a perfect opportunity to join it. All right, let's talk about the broader markets, and we'll go relatively quickly here. So same count as ETH and Bitcoin, week 18. Now, we thought that this was the start of the weekly cycle decline. We got a nice little, there was a nice little, swing high here even, right? Like, once we crossed below 626.19, but we can see the market recovered all of that and then some, right? And so just to put a finer point on it, we had this high on Thursday, July 31st on day 46. So the market rallied from here to here. That was 46 days. And just to put that in context, what was the percent gain? That was a 11% gain. That's really strong for the entire S&P 500. So it rallied for 46 trading days. And then we had this violent move down for just 2 days, right? Like, look at this, but look at the range these two candles covered. They take out all of these gains and almost take out this low here, almost, right? So basically wipes out a few weeks of progress in 2 days. And so it's definitely not, it's definitely rare that we get a daily cycle decline that is that short, but that's what we got. And we also got this giant gap as part of this, right? So we got this big bearish candle on a Thursday, and then we had this gap down opening on Friday, and then we continued to sell lower. But the market did start to rebound towards the end of the day. And that rebound led to this higher high on Monday, which was a swing high, or excuse me, which created a swing low by closing above this high here. And equally important, look at this. Look how that candle closed the gap, right? It closed right above the gap. But importantly, the next day, we closed below the gap again, or like in the gap more or less. This, in hindsight, turned out to be consolidation. This is what we want to watch for now, that we see a pattern like this, right? Where price looks like, uh-oh, that's a caution sign, but then it just ends up being consolidation. And then notice, price revisits that level, right? This level also represents a swing high, right? To be clear, everything below that level is a swing high. Notice price dipped below that again, but then it got bought. So this market is telling you it wants to go up, and you need to prepare yourself for those signals. That said, this big reversal means the weekly cycle is continuing to advance, right? We got a really short daily cycle decline, and now we're in a new daily cycle. Friday was day 10, and what do we have on Friday? A red candle. Does this look familiar to this in any way, right? Like, think about that idea. Like, sometimes a red candle is really just consolidation. It's not super bearish. The other thing I would call out is the last 3 days. So this is Friday, Thursday, Wednesday. We've just been inside the same range. Look at these candles. They haven't gone anywhere, right? Like, they're literally just inside the same range. The low of that range is $642.68. So super clear. That's your line in the sand. Watch for false breakdowns below that level, right? A dip below that level and then a reclaim of that level, super bullish. And in fact, I'd say that would be your ideal setup. You want price to break below 642.5 in that neighborhood. Maybe dip all the way down to 640, maybe dip all the way down below 642. And then you want to buy the reclaim of that. I'll also note, look how far above the 10-day moving average we are. Price needs to pull back. At this point, the next question is, when are we going to have our daily cycle high? Because it's already day 10. That doesn't mean it's super late, but it's also not early in the daily cycle. But we have made another new all-time high, right? We broke back above this level after this like little sort of congestion here around this price level, right? Like, look at this day closed below it, this day closed above it, this day dipped below it, and then we haven't really kind of looked back. Now, again, your next line in the sand is this cluster of lows here. And you can notice this is the first candle that breaks above this high. And then you have these three candles that basically consolidate at the higher end of the range of this candle, which is to say this is all just a consolidation of this little rally here that took us above this to give us a new all-time high. This is all super bullish. Again, watch for a break below that level and a false breakdown. We may not even get that, right? But all of that said, it's week 18. It's like, I mean, we've had weekly cycles that were like, this ran for 22 weeks. This was 19. So like, I'm not saying we have to top tomorrow, but it's getting late. And we know the next big catalyst is the Fed meeting where people are expecting a rate cut. That will happen the week of September 15th. That will be week 23. So now it's a question, like, it's actually in some ways a little binary. Do we rally into week 23 and that's our top? Or do we see a short, shallow pullback, right? Something like this into week 23 and before a rally. And that doesn't mean we top tomorrow, next week, right? Maybe we go up week 19, we go up week 20, and then we see a pullback into week 2023, something like that, right? That's what we want to watch for. But for now, the trade is to be long. But notice, just look with your eyeballs, just visually. Look at all of the time price is spent above. So this line, this like sort of light colored line, is the 10 period moving average. This is a weekly chart. So this is the 10 week moving average. Just look with your eyeballs since this gap on the weekly chart. So this was a gap that happened on Monday. So it created a gap on the weekly chart. Do you notice anything? Price has been nowhere near, I mean, it got close to the 10 period moving average. That is a really great sign that eventually we're going to get a mean reversion trade and we're going to get a move below the 10 period moving average. Again, that doesn't mean you're waiting to short this necessarily. That means there's going to be a great buying opportunity at some point. Now, if you're nimble enough to catch the short, that's awesome. But just look back at this chart. Price can't just stay above the 10 period, like a short term moving average, like the 10 period moving average for forever. It just can't. It's impossible. I mean, look at this period. Look at price. Oh my goodness. Look at all that time. And then, okay, finally, mean reversion. Just go back and look at a chart yourself. It's not voodoo. It's not magic. It's just math. Like price can't stay that elevated, can't keep running like that forever. And so it's exciting because it tells you, all right, some point we're going to get a nice sharp pullback. It tells you don't chase this. Doesn't mean you can participate in this rally, but position size. Make sure you have dry powder so that you can get back in when we get this inevitable retrace, right? And again, also the timing. We've been rallying for 18 weeks. Now, is it possible this was a weekly cycle low? Yeah, it's certainly possible. That seems unlikely to me. I mean, stranger things have happened. This is a very bullish market, but there are a couple danger signs that I would point to, actually. One, QQQ closed as a swing high. That's important, right? So the high for QQQ, the latest all-time high was actually Wednesday. So Wednesday of this week. So notice SPY made a new all-time high on Friday, I think, 646, 646.19, 640. Oh no, wait a second, 646.19. So SPY actually did not make a new all-time high. So the last all-time high was Wednesday for SPY as well. QQQ just got nowhere near it. Again, another sign it's bearish. That's important. So notice by closing below $578.94, that created a swing high. I'll just put a line here so it's very clear. This is so helpful because it's objective. It's just math, right? Like you can create a simple program to find this, and like it's just numbers, right? And so we've now closed as a swing high. This was day 10, so this is day 8. So the possibility we have here is that the QQQ has topped out in a daily cycle, and that could mean that we've topped out in the weekly cycle as well. You have this little spinning top looking thing. That is not my base case. It is something to watch for. And notice we have this 10 period moving average will start to curl down eventually. So a little mean reversion trade. And look, again, same kind of picture on the weekly. QQQ hasn't touched the 10-week moving average in a long time. It will eventually. Perhaps this is the start. Let's watch. And the weekly close, or the weekly candle, the low is $571.57. So we get a close below that next week, and that is bad news, right? And that really means then we essentially end up having consolidation for the last 4 weeks, right? Because this candle was actually a bearish outside weekly candle. I mean, what a crazy reversal off that, right? Like this is like, oh my God, we're going lower. Nope, no, we're not. But you want to watch for that. That would be a weekly swing high. Again, a close below $571.57 next week. But on the daily, we already have a swing high. So your line in the sand is $578.84. A break above that, you're in business. That would be an actionable trade. Big picture though, we are still early in a new long-term cycle. It's month 4. Look at this beautiful lower wick and this beautiful green hammer candle. Beautiful stuff. Also to note, the ratio of QQQ to SPY are also starting to decline on the daily, and more importantly, starting to top out on the weekly. Notice these last peaks coincide with market declines. So that's another caution flag here. So again, if we get follow through next week, that would give us a swing high on the weekly for this. This is your ratio chart. Other indicator, the Dow. So the Dow actually closed as a weekly all-time high. Usually when the Dow is doing better than SPY, that's a bad sign. Look at the ratio. It's actually green on the week, trying to bounce. And we have a little swing low on the daily, so that's important. DIA, Dow is starting to outperform SPY. What about IWM? IWM closed as a swing high on the daily. So by closing below $227.83, that is a swing high on the daily. Same count on the weekly, week 18. So you want to watch for that swing high. Does that get worse? Does that pull down the weekly? Have we started the weekly cycle decline? Have we started the daily cycle decline? Both are not a guarantee. I mean, nothing is a guarantee in markets, but you want to watch that level to the upside and to the downside. $226 is your line in the sand. We break below that and look out below. That is IWM. What about SMH? So SMH, this is going to sound like a broken record, also closed as a swing high. Look at this line. Hopefully that's really clear to you. You can start to identify these very, very easily. That's a close below $298.57. So that becomes your line in the sand to the upside. And we need to stay above $293.94. Below that, and that's continuation. That's the downtrend extending on the daily. And you can see we're already starting to touch the 10-day moving average. What does a 10-period moving average look like? All right, same idea. We're starting to get closer to touching it, which is what you would expect, that eventually we're going to get there. What about IWM? How does that look? Okay, so IWM, different story. It's already made contact with the 10-period moving average. What about the DIA? Yep, it sure has. And so in some ways, DIA and IWM probably give you a sense of where the broader market is heading to a bigger pullback. I'm not saying that happens next week again, but rallying for 18 weeks is a long time. Moving on to Dixie. So Dixie has been kind of consolidating in this bear flag pattern, if you will, on the weekly. It appears to be week 17. We're trying to hold above this little swing low on week 11. The high of that comes into play at 97.42. So if we break below that, right, like we get a candle that comes down like next week, something like that, that shows you the decline is starting to accelerate. But we've really just kind of paused here after this big wick candle a couple weeks ago. A little bit of no man's land. But what does the daily tell us? So on the daily, we are below this swing high here from this bearish outside daily candle, and that is active below 98.61. So we're quite a bit of ways below that, actually. And I would say even more proximate to that would be here. So price has to get above 98.33. So you get back above that and you could have a chance here. And if you're short, that would be your signal to kind of get out, take profits. Bigger picture, we appear to be in long-term cycle decline. Look at this red month. We had this little bit of a cascade lower on the monthly chart. We had this green candle. Like, oh, wait, we have a swing low, right? We have a swing low. This is actually a bullish outside monthly candle. That is usually a really positive signal. But what did we follow that up with? What so far is a red candle that also made a higher high. So like, I'm going to say this because it's important to understand. This was an outside candle because it made a lower low and then it made a higher high. So it broke both sides of the range of this candle. This candle has made a higher high and now it's gone red. So there's a very big possibility that this candle is going to break below this low, like this candle. And so this will be an outside candle of this candle. So you'll have two outside candles in a row in opposite directions, right? This was a bullish outside candle of this candle because it broke this candle's range. This could become a bearish outside candle of this bullish outside candle. All that to say, that's pretty massive volatility for the world's reserve currency, right? Which, like, it's making higher highs and higher lows. Like it's just a big megaphone pattern, if you will. I mean, that's rare to have two outside candles followed by each other, especially on a monthly chart. We'll see if that plays out. That's what you would get if this weekly cycle continued to decline, which is why I'm inclined to think that may be what we're seeing play out. Something very rare and interesting to watch. A study in price action, really, in some ways. The 10-year treasury, let's move on to that. It's oscillating. It's just consolidating here. Week 19 after this top on week 7. But, the real top actually happened on the first week, and then we really haven't gone anywhere. This is all consolidation inside the range of that big week from April 7th. So that range is a high of 4.59 and a low of 3.88. We're obviously at the higher end of that range, kind of consolidating. You could call this a gigantic bull flag of this big candle. But at this point, kind of in no man's land. This is a nice little hammer candle last week. The low is 4.20. So you want to watch that to the downside. And on the daily chart, this my take on this is that we could be relatively early in a new daily cycle. It's like these things can be a little unpredictable, at least on the daily level, because the weekly cycles are just so long. But we do have this little swing low that's active as long as we stay above 4.23. So there goes that 4.20 level, or that area in this case. You can see we have this little wick we're able to hold above. So you want to watch that to the downside, watch false breakdowns below. Big picture, this has just been consolidation and actually a little bit of a double top here. But I mean, look at this. Basically, since October 2023, which is when we had a bigger market bottom, we've just been going sideways, more or less. That's the US 10-year. What about oil? Oil is not looking good here. Let's look at the monthly chart. That's the one that I would pay the most attention to. You can see we've had this like step down, right? Right, like this is a lower low than that. This is a lower low than that, right? Not like a plunge down, but nice little step down. And then we had this little rally, like, oh, is this the end? Like, is this the end of this downtrend? It looks like it's not, because we're threatening to form a monthly swing high. So you can see we're below the low of this candle. So if we close here, if we continue this decline, that's below $64.69. So as long as we're below $64.69, we have probably this little rally, this little 3-month rally is probably over. I mean, look at this gigantic wicky candle. That's not a good sign in and of itself. That's your monthly. And if you think about where we are on the weekly, that would put us at, we had our bottom on April 7th, that synchronized bottom. We had a top on week 9, and it is currently week 18. So that is actually your saving grace in a little bit, in that we've already been declining for a little bit. It's already week 18. And so that's interesting, right? I could see a world where price holds around here even, right? Like imagine a candle that drops like somewhere like there, right? And so it takes out these lows, and then we kind of reverse up. I'm not saying that's what I think is going to happen. I'm saying that would be your bullish case. That's what you want to watch for if one were bullish, right? You would take the trade like here. You don't have to predict anything. You would just react to this swing low if that's what we saw. But for me, this is a no touch, no reason to get involved in the oil complex right now. Moving on to TLT. So this is on the weekly chart. We have a little swing high. That's important. So closing below $86.92 formed the swing high, and that would be on week 11. This is a weird cycle because we generally, like this previous cycle ended on week 18, which is very short. And it looks like we may have a top on week 11. And that's after this little downdraft as well. And so bigger picture though, this is all just consolidation, just like the US 10-year is consolidating. But on the daily chart, the actionable level is this swing high here. So we have this daily swing high is active below $87.78. And so we've only been declining for, 4, 5, 6, 7, 8 days. And if this looks like a cycle that was 37 days. And so this is day 22. Now, it doesn't mean we have to have another 37-day cycle by any means, right? Like that cycle was 27 days, you can see, right? This cycle, let's call it there. That's a really long one. But you could argue that this was a really short one here at 20, right? So that's our saving grace, I guess, in some ways, is that we've already been declining for a little bit. And so at this point, any break above this high here, for example, would give us a swing low, and that would be totally tradable, right? Like something like that, right? Like that's your trade. So a break above $86.78. Now, the catch is, let's say we get further downside on Monday, like use your critical thinking. If you got this move like this, well, then now you have to pass above here, right? Like if we get further downdraft, well then like it moves. The lower we go, the lower the swing low. Like the lower the swing low would have to be for the for the reversal to happen. So you have to adjust in real time. So that's TLT, and on the monthly we're red, and I mean this is just wow. Look at this consolidation, right? After this really gigantic move off this top. I guess technically the top came in 2020, but then there was this other top back in 2021, end of 2021, after this like little bit of a bear flag off of this decline. So nothing to see here really, folks. At some point this will be a trade, but nothing to really see here. We talked about Bitcoin already. All right, we're going to close out with precious metals. So gold also consolidating, a little bit frustrating if to be honest. But so this is week 11, so week 16, 17, 18, 19. So it looks like week 13 and just doing nothing here. And the cycles are like not synchronized at this point between gold, silver, and precious metals, which is why price action is king. Follow the price action. This is a little swing high. So by closing below 33.45, that formed the swing high on the weekly. But I wouldn't make too much of that. Zooming into the daily, right? Like this looks like that is a daily cycle. Oh, interesting. So the bull case would be that we're in a new daily cycle and this is a little pullback that we're going to survive. But it also could be that, we just topped out in this new cycle. Very clear line in the sand, though. It's got to stay above 33.29, 33.30, call it. And we've got to break back above 33.75, right? You need to see a move, something like that. But, like, if you zoom out, like, we just haven't really been going anywhere. Look at this. This is just sideways movement. I do think we're in the latter stages of the 8-year cycle. Look at these monthly candles just going absolutely nowhere, but also firmly inside the range of this April top candle so far. So I think this is all consolidation that is setting up a move, something like this. This is my expectation, not my prediction, right? That we're going to move into some kind of bull market top, and then we will begin the longer term pullback, like it has worked out forever. Like, and that's not just a gold thing; just it happens, right? But I mean, look at this gigantic rally, right? This is going to end in some kind of climax, and then we continue our move down. Speaking of 10-period moving averages, look at this 10-month moving average. Look at that thing. We have not touched it since March 2024. Oh, wow. Holy smokes. It's been more than a year since gold has touched its 10-month moving average. Again, it's not like some kind of astrology or something. It's just math. Price can't stay above a short-term moving average like that for very long, right? Like it just can't. Like just go back and look at any chart of any asset over any period. At some point, you're going to get that reversion trade, that mean reversion. But I think we go a bit higher before we see that. Or, I mean, I don't think that would be the end of the bull market necessarily. If anything, it would be a nice little recharge. So that's gold. What about silver? So silver taking a little bit of a different path. You can see we've already nicked our 10-period moving average, for example. So it hasn't been nearly as strong as gold. Actually, excuse me. That's your weekly. What about the monthly? Yeah, definitely. I mean, wow. Closed well. I mean, didn't close below it, but dipped way below it in that April sort of meltdown. But I mean, look, as I've said last several updates, silver hasn't been this high for years. Look at this 2020 peak. Remember that FOMO, the crazy move, this crazy move? Notice where price is, right? Price is firmly above that, right? If anything, you now have this congestion zone that I absolutely expect price to come back to, right? Like this idea, oh, it'll never come back, yada, yada. That is BS. At some point, we're going to see some candles do something like that, right? And that's going to be an opportunity, right? It depends on when it happens, right? Like if it happens after the bull market top, you have to kind of read the tea leaves a little bit. Like when this happens really matters. But at some point, we are definitely going to do, we're definitely going to do some work within this range again. Look at all this price. That's all directly above here. So that's silver. The low for this month so far has been 36.37. On the weekly, we are just kind of consolidating up here. So we do have a swing high on the weekly in play. So if this thing stays below $37.96, that is actually a swing high on the weekly. Super important to be aware of. We did close just above that. That is super bullish. That becomes a line in the sand, right? You can play that. That is very actionable in terms of a trade. And on the daily chart, we're sitting below this little swing low here, right below $37.52. That is absolutely tradable in terms of a risk level. What about GDX? So GDX is looking kind of good. Look at that. Consolidating at the higher end of the range on this weekly chart. Not quite at all-time highs, but super. Wait a second. Is that all-time high? Might be. I mean, shucks. This thing took its time, but it finally got there. Again, this is the 2020 top, similar to silver. We're appreciably above that. We've even made a higher low above that. And on the daily, oh, look at this consolidation. Ooh. So, and we're just touching the 10-period moving average. So very clear, $57.52 in that neighborhood. Any dip below that and recapture is a very bullish, buyable move. And in terms of the length of this weekly rally, it's been about 11 weeks. So there's still a lot of time to just go completely explosive here and do something like that. Right, like these candles have been small and all just consolidating. Look at these candles. These three candles. Boom, boom, boom. So I suspect that we're gonna get that as gold goes into its 8-year cycle top. The key will be recognize as that's happening and make your plan to take profits, right? Because the environment isn't gonna last forever, right? It's gonna after the top, there will be a painful drawdown that you don't want to get, sort of caught in. So that is GDX. We'll do platinum and then close out with natural gas and uranium. So platinum had been moving like a monster, and then we got this swing high below $1,440, basically, right? And we see that line there, right below there. We tried to get back above. We could not. And so we are now kind of bear flagging a little bit. But we do have a swing low in play. So above $1,323, so that's this line here, right? You can see this green little hammer candle. That is a swing low. So that might be our daily cycle decline. But where does that put us in the weekly? So weekly, that 1440 level is also a weekly swing high. So we break back above that and we could be in a new weekly cycle. I mean, let's look at what's the count here. This is another great example. You don't have to chase anything. That was 15 weeks. This is week 18. So that would definitely be an early weekly cycle low, but it's also possible that this is just a sort of mid-cycle pullback and we're going to go on to make a new high week 20 or something like that, and then we'll have the real weekly cycle decline, especially since we're so early in this. Like look at all of this consolidation for so many months. Again, great example. You could have made the mistake of buying here or even here, or God forbid even here, because you just chased this thing. You got impatient. This is now the kind of chart you want to buy. The risk is more slanted to your favor, even if you bought here. Because now your risk is below this low here, right? That's 1262, something like that. You don't have to chase it. Again, of course, when you bought it up here, this would have been a beautiful green candle. It would have looked awesome. This is going to be, I would say there's an even better buy point probably, but remember, we're sitting below a daily swing low. That's your risk level. That 1262. You break below 1260, call it in that area, you're out. You cut the ripcord. Again, this is definitely a nice little case study, and don't chase it, especially since we're probably going to rally for several months, given how long we've consolidated here. And this probably just rallies with the gold 8-year cycle high. I don't know if we get all the way back to new all-time highs on this thing, but there's room there. So that's platinum. Let's look at natural gas, and then we'll close out with uranium. So natural gas trying to form a little bottom here on the weekly. So we don't have a swing low, but we have the makings. We have the first ingredient. So we have this little candle, nice little lower wick. We need to close next week above 2.98, something like this visually. If you could see this, that gives you a weekly swing low. And that probably means that was your weekly cycle low. That's week 16. That's kind of short, but look at the structure of this thing, right? That's after, that's interesting, right? Like we have this low, that's 25 weeks. And then we go from here to here, that's 13. So that's super short. So maybe the way we're actually thinking about this is here, right? That's 28. Maybe this whole thing is one. Don't get caught up in like the weekly, the counts and all that. Be more focused on the price action. So again, what we want to see is a swing low here on the weekly. And that will happen if we get continuation of this daily swing low. So to be clear, we formed a swing low on the daily. That's important. So, and that's how it works, right? You can't have a swing low on the weekly without a daily one first. So that's your first sort of signal, your first sign. So by closing above $2.83, the high of this candle, we have a swing low. So we got that on Thursday-ish, and then we got follow through on Friday. So that creates a nice clean line in the sand for you. That is natural gas, probably a weekly cycle low here. Definitely a daily cycle low, right? Because we just, look how we've been riding below the 10-period moving average, and now we're threatening to close above it. So Boyle could work here. For Boyle, that swing low happened above $30.04. All right, let's look at CCJ and some other uranium names. So I talked about how we're getting long in the tooth in the weekly cycle, and we are sort of consolidating now. We have this big red candle. In the last 2 weeks, we've just consolidated inside the range of that candle. It's now week 18. So I think what we're doing here is we're working off the rally. We're consolidating instead of having a bigger decline, which is good. That's positive. And that gives you a very clear line in the sand, right? Price just needs to stay within this range. Or I should say, as long as price is within this range, there's no reason to get super bearish or super bullish. I would say you would lean bullish because this is essentially a consolidation of this gigantic move. Not to mention the structurally bullish things for uranium, and the fact that look at this move, this big downdraft, fake out, another downdraft that undercuts this low. All that to say, this looks like a long-term bottom of this big rally that got basically, you got this, the April 7th, everything kind of the synchronized April 7th bottom, if you will. This looks like a new long-term cycle, and exciting. Look at this consolidation the last 2 months. This is giving you a chance. Price doesn't do that very often, but it's giving you a chance here. Look at that. We're just inside this range, right? This candle's range is a high of $80.32 and a low of $69.32. We're closer, like we're at $75. So we're $6 above the bottom end of that range. Maybe we get a little bit more downside. You get an even better buy point. But I'd say you can start to leg in here. This is consolidation off of this big initial move, setting up another big candle like this or like this. That's CCJ, but we see the same thing for URNM. So URNM is on pace for a bullish outside monthly candle, actually. So notice this candle opened and started below the low of this candle, but we're now on pace to make a higher high above it. So at $50.77, you could set your target there. We probably see some pullback once we get back up there. But again, same idea. Look at this big downdraft and then a big rebound. We are early in a new, and that goes for the broader market as well, right? There's no reason, don't buy into what you're hearing in the press. Focus on the price action. All right, that's all we've got for the update this week. And thanks for watching.